Welcome to the deep dive. Today, we're really digging into two huge EU regulations impacting Luxembourg's financial sector.
That's right. We're talking MICA, the Markets and Crypto Assets Regulation, and DORA, the Digital Operational Resilience Act.
Yeah, big topics. So we've looked at the regulations themselves, the Luxembourg laws, putting them into action, and the key CSSF guidance.
Exactly. And the aim here is to cut through that complexity for you if you're a legal professional, a board member, director, RCRR, COSEC, anyone making decisions in Luxembourg finance.
We want to make this clear, concise, and hopefully make the really essential stuff stick.
Mm.
And just to note, our info is current as of May 4, 2025.
And we'll be mentioning specific EU regs, Lux laws, CSSF comms throughout, just to be clear on sources and, copyright.
Okay, let's jump straight into MICA. What is it, fundamentally?
Well, think of MICA as the EU's first proper harmonized rulebook for crypto assets, specifically the ones that weren't really covered by existing financial laws like, say, MiFID II.
Right, because before MICA, things were a bit patchy, especially here in Luxembourg.
Definitely patchy. Mostly focused on AML-CFT, anti-money laundering. MICA is much broader.
So what are its main goals then?
It's aiming for quite a lot, actually. Legal certainty, which is huge. Better protection for investors and consumers. Market integrity, financial stability, especially looking at stablecoins.
And encouraging innovation, too.
Yes, and helping CASPs, that's crypto asset service providers, scale up across the EU with just one authorization. The idea is same activities, same risks, same rules, and being technology neutral.
Okay, so crypto asset under MICA, is that a wide net?
It is pretty broad. It's basically a digital representation of value or rights that you can transfer and store electronically using DLT or similar tech.
And MICA breaks these down.
Yeah, into three main types. First, you've got asset reference tokens, RTs. They try to keep a stable value by referencing other assets like a basket of currencies or commodities.
Okay.
Second, e-money tokens, EMTs. These aim for stability by referencing just one official currency like the euro. And third is kind of the catch-all category. Other crypto assets, including utility tokens or, the big names like Bitcoin or Ether, provided they don't fit into the RT or EMT boxes.
And these CSCs you mentioned, who are they exactly?
They're the businesses providing crypto asset services professionally. So things like custody holding crypto for others.
Right.
Running trading platforms, executing orders, placing crypto assets, RTO receiving and transmitting orders, giving advice, managing portfolios. It's a pretty comprehensive list.
And MICA applies to anyone doing this in the EU or issuing crypto.
Essentially, yes. Issuers, anyone making a public offer, seeking admission to trading, or providing those CSP services within the EU falls under MICA's scope.
Are there things specifically not covered? Exemptions.
Oh, definitely. A big one is crypto assets that actually qualify as financial instruments under MiFID II, security tokens.
Wow.
Getting that classification right is vital.
And the CSSF has guidance on that.
Yes. Circular 25886 adopts the ESMA guidelines on this. It's a critical boundary. Also, unique and non-fungible tokens, NFTs, are generally out. Okay. And then traditional financial stuff like deposits, most funds, unless they're EMTs, securitizations, insurance products, plus certain bodies like the ECB, national central banks.
So zooming in on Luxembourg, who's directly impacted?
Well, obviously, the issuers of these RTs, EMTs, and other crypto assets based here, and the CASPs operating from Luxembourg.
But it could affect existing financial players, too.
Absolutely. If you're already CSSF regulated a bank, an investment firm, a ManCo, an EMI, and you want to start offering crypto asset services, MICA will apply to those activities.
Which is quite a step up from the old VASP registration.
Oh, completely. That was mainly AML focused. MICA brings in a full prudential and conduct of business regime. Authorization, governance rules, capital requirements, operational standards, white papers, investor protection, market abuse rules, the works.
That line between MICA and MiFID II sounds like a real headache.
It requires careful analysis. Firms absolutely need robust internal processes to classify assets correctly. Non-compliance isn't really an option.
Okay, timing.
Yeah.
When did MICA actually kick in?
So, EU-wide. The rules for ARTs and EMTs, Titles 3 and 4, applied from June 30, 2024. The CSSF expects full compliance for any new activities from that date.
And the rest of it.
All the remaining bits, like rules for other crypto assets and CASP operations, applied from December 30th, 2024.
And Luxembourg's own law.
Luxembourg was pretty quick. The law of 6 February 2025 was published Feb 10th and came into force straight away.
And that law did what exactly?
Crucially, it officially named the CSSF as the competent authority for MICA here. It gave them the necessary supervisory, investigation, and sanctioning powers.
Right.
It also handled implementation of related things like the transfer of funds regulation, the TFR, which is closely linked to crypto transfers, and importantly, set out Luxembourg's approach to transitional measures.
Ah, yes, the transition period for existing VASPs. That's important for many.
Very. Luxembourg opted for the maximum period allowed, running until July 1st, 2026.
And that applies to
VASPs virtual asset service providers, who were already registered for AML purposes before December 30, 2024. They can continue their registered services until that 2026 date.
But this isn't automatic MICA compliance, is it?
Not at all. This is critical. The transition just allows them to continue operating while they apply for a full MICA license. It doesn't grant one.
So they still need to apply.
Absolutely. Every VASP wanting to operate as a CASP under MICA after July 1st, 2026, or wanting the EU passport sooner, must submit a full, formal MICA license application to the CSSF.
No shortcuts for existing players.
No simplified process. It's a full application. So the message is, don't wait. Start preparing and submit that application well in advance to avoid any disruption.
Okay, so the CSSF is ground zero for MICA in Luxembourg.
Completely. They authorize and supervise CASPs and RTEMP issuers. They can do on-site checks, demand info, impose sanctions, even levy fees.
And how do firms actually get authorized? If you're new or an existing VASP needing the license.
You apply to the CSSF. They actually encourage firms to engage early, have a preliminary chat.
Makes sense.
The formal process then involves an initial meeting, discuss your business plan, services, governance, key people, followed by submitting the complete application file.
Are there specific contacts?
Yes, the CSSF has provided email addresses .ipig@cssf.lu for CASPs and RT issuers, and whitepaper.notification@cssf.lu for notifying white papers for other crypto types.
How long does it take?
There are minimum processing times, like 70 working days for a CSSP application, but realistically, if the file isn't perfect, it can take longer.
What about existing regulated firms like banks or mancos wanting to add crypto services? Is it the same full application?
No, there's a potentially simpler route under Article 60 of MICA for certain entities already authorized under other EU laws, credit institutions, investment firms, UCITs, mancos, AIFMs, EMIs, CSDs.
Okay.
They might be able to provide certain CSP services just by notifying the CSSF at least 40 working days before starting.
Just a notification.
Well, a notification, but it's expected they'll talk to their usual CSSF supervisor first. The CSSF actually surveyed these institutions back in mid-2024 to see who was planning what.
Right. Let's quickly recap some of those core MICA requirements for issuers.
The big one is the white paper. Mandatory for most offers or admissions to trading. It needs to be detailed, fair, clear, not misleading, covering the issuer, project, the crypto itself, rights, risks, tech.
And submitted to the CSSF.
Notified to the CSSF, yes, and sometimes needs approval, especially for arts and EMTs, then published. And the issuer is liable for what's in it. Marketing also has to align.
Any specifics for arts and EMTs?
Yes, more stringent rules. Generally need CSSF authorization, must hold adequate reserves, meet own funds requirements, offer clear redemption rights. EMT issuers have to be credit or e-money institutions and redeem at par.
No interest payments allowed.
Correct. No interest on arts or EMTs. And both need recovery and redemption plans.
Okay, and for the CSEPs, the service providers.
Authorization is usually needed unless they're using that Article 60 notification. Organizationally, they need to be a legal entity, registered office in the EU, effective EU management, at least one EU resident director.
Capital requirements.
Yes, minimum capital, either a fixed amount or based on overheads, and then a whole suite of operational and conduct rules.
Such as?
Acting honestly, fairly professionally in client interests, clear, non-misleading info, including, interestingly, climate and environmental impacts of the consensus mechanism, risk warnings, cost transparency,
Complaints, conflicts.
effective complaints handling, managing conflicts of interest, robust security for systems and client assets, segregating client assets. There are also specific rules depending on the exact service provided.
And market abuse.
Yes, CASPs running trading platforms need systems to prevent and detect it, insider dealing, manipulation. ESMA is developing more detailed standards on that. And of course, full AML CFT compliance is essential, integrated via Lux Law and the TFR.
And the CSSF keeps issuing guidance.
They do. In late April 2025, they released a batch of circulars, 25-885 to 890, applying ESMA and EBA guidelines under MICA.
Oh, did they cover?
Things like cooperation with non-EU regulators, security protocols for issuers, crypto transfer procedures, clarifying reverse solicitation, criteria for classifying assets as financial instruments, and reporting templates for RTMT issuers. It shows the CSSF is really aligning with the EU framework.
So Luxembourg's strategy seems clear.
Yeah, it looks like they're positioning themselves seriously. Prompt CSSF designation, encouraging dialogue, using the full VASP transition, advancing related tech laws like Blockchain 3.
Building on the fund industry strengths.
Exactly, aiming to be a key European hub for regulated digital assets.
Okay, let's switch gears to DORA. What's the driving force behind the Digital Operational Resilience Act?
It's really the EU acknowledging how incredibly dependent the entire financial sector is on ICT information and communication technology and the escalating risks that come with that.
Cyber attacks, system failures.
Precisely. Payments, trading, asset management, insurance, it all runs on tech. Disruptions can hit individual firms hard, but also potentially destabilize the wider system because everything's so interconnected.
So DORA is about strengthening defenses.
It's about building resilience, harmonized, robust digital operational resilience across the EU. It's a shift from just having capital buffers for operational risk to mandating actual capabilities, the ability to withstand, respond to, and recover from ICT incidents.
And it consolidates previous rules.
Yeah, it pulls together various ICT risk rules that were scattered across different laws before. It aims for consistency.
Who does DORA apply to? Is it as broad as MICA?
Broader in many ways. It covers about 20 types of financial entities. Banks, investment firms, payment institutions, insurers, ManCos, AIFMs.
CSBs too.
Yes, CSPs and art issuers regulated under MICA are also included, plus critical infrastructure like CCPs, CSDs, trading venues, benchmark administrators, crowdfunding platforms. It's a long list.
And it reaches beyond financial firms themselves.
Critically, yes. It also applies to ICT third-party service providers deemed critical CTPPs. Think major cloud providers or data service firms the sector relies on. They'll face direct EU-level oversight by the European supervisory authorities, the ESAs.
Why the push for this now?
It reflects the reality of the modern threat landscape and how central ICT has become. Incidents can spread rapidly due to interconnectedness. The old rules weren't keeping pace. DORA aims for consistently high standards for a stable yet innovative system.
Okay, let's break down DORA's core components. I hear it's built on 5 pillars.
That's a good way to think about it. Pillar 1 is ICT risk management and governance. This is fundamental.
What does that involve?
Firms need a solid, comprehensive, well-documented ICT risk management framework. And crucially, it has to be integrated into the overall risk management system, not just siloed in IT.
And governance. Who's responsible?
The management body. The board, senior management, they have ultimate responsibility. They need to define, approve, oversee, and be accountable for the framework and the digital resilience strategy.
So the board needs to understand ICT risk.
Absolutely. DORA explicitly requires them to possess and maintain sufficient ICT knowledge and skills. That implies ongoing training. They need to actively steer the strategy.
What does the framework itself cover?
It needs policies, procedures, tools for the whole life cycle. Identification mapping functions, assets, dependencies, protection and prevention security, access control, change management, detection monitoring, anomaly detection, response and recovery incident plans, business continuity, disaster recovery, and learning, analyzing incidents, using test results to improve.
Sounds comprehensive. And existing CSSF governance rules still apply.
Yes, things like CSSF Circular 24860 on general governance reinforce these expectations.
Okay, Pillar 2, handling incidents when they happen.
Right, ICT-related incident management and reporting. DORA standardizes this. Firms need processes to detect incidents quickly, manage and resolve them effectively using predefined procedures.
And classification.
Yes, you need to log and classify all incidents based on criteria set out in technical standards, things like impact, duration, geographical spread, data loss, criticality of services affected, economic impact.
And reporting.
Major incidents must be reported to the competent authority, the CSSF for most, CAA for insurers without undue delay. It's a standardized process using specific templates, initial, intermediate, and final reports.
What about just threats?
You're also encouraged to voluntarily notify significant cyber threats even if they haven't caused a major incident yet.
How does the reporting work practically in Luxembourg?
Through the CSSF eDesk portal, there's a specific DORA major ICT-related incident and significant cyber threat notification form, or you can use an API. This replaces older channels.
Anything firms need to do to use eDesk.
Yes, you need a valid LEI code, and you must assign someone as the IT incident notifier role within eDesk. If you outsource reporting, you need to tell the CSF first. Aggregated reporting by third parties isn't currently allowed.
Weekend reporting.
The CSSF might require it for some entities, yes.
Okay, pillar 3. Testing resilience.
Exactly. Digital operational resilience testing. Most firms, except microenterprises, need a sound, comprehensive testing program. It has to be proportionate to their size and risk profile.
What kind of tests?
A whole range. Vulnerability scans, network security tests, physical security scenario tests, performance testing, end-to-end tests.
And something called TLPT.
Yes. For significant entities, there's a requirement for advanced threat-led penetration testing at least every 3 years. This simulates real-world attacks by ethical hackers.
Who does the testing?
Qualified testers, either internal or external, who have the right skills and independence. The Tiber EU framework is often mentioned as aligned with DORA's TLPT requirements.
Right. Pillar 4 sounds crucial. Managing risks from external tech providers.
Hugely important. Managing ICT third-party risk. Firms have to integrate this risk into their overall ICT risk framework. And remember, the financial firm always remains fully responsible, even if services are outsourced.
So what do they need to do?
Adopt and review a strategy on ICT third-party risk, including a policy on using providers for critical or important functions.
And the Register of Information.
Ah, yes, the ROI. That's a big one. You need to maintain a detailed register covering all contractual arrangements for ICT third-party services. All of them.
And keep it updated.
Constantly updated and ready for the CSSF, or CAA if they ask. The first submission deadline was May 31st, 2025, using a specific CSV format via eDesk. The CSSF gave detailed guidance on this.
What about the contracts themselves?
DORA mandates specific clauses in contracts with ICT TPPs. Things like clear service descriptions, data processing locations, security measures, incident notification duties, access and audit rights for the firm and regulators, and clear termination and exit strategies, especially for critical functions.
Is negotiating those easy?
Not always, especially with large providers. The CSSF acknowledged this and encouraged firms to flag systemic issues.
What else under this pillar?
Assessing ICT concentration risk, relying too heavily on one or a few providers. Having solid exit strategies if you need to leave a critical provider, and complying with the EU oversight framework for those critical TPPs.
And the CSSF has specific guidance here, too.
Yes, Circular 25882 gives instructions for DORA entities on ICT third-party services, including a mandatory notification form if you plan to outsource a critical function or change its status.
Good. The final pillar. Pillar 5.
Information sharing arrangements. DORA encourages firms to voluntarily participate in arrangements to share cyber threat intelligence within trusted communities.
To improve collective defense.
Exactly. But it has to be done carefully, respecting confidentiality, data protection, and competition law.
So DORA really shifts ICT risk to the top of the agenda.
Absolutely. It's now a core strategic and governance priority. The detail, especially around the ROI and third-party contracts, is a significant step up and requires a lot of work and understanding of your whole ICT supply chain.
And DORA became applicable when?
January 17th, 2025. Compliance was expected from that date.
How did Luxembourg bring this into law?
Through the law of 1st July 2024, which also applied from Jan 17, 2025, this DORA law does several things.
Like designating the authorities.
Yes, it names the CSSF for most of the financial sector and the CAA for insurance as the competent authorities under DORA. It gives them supervisory, investigatory, and sanctioning powers.
Including fines.
Yes, fines and other remedies. The law also transposes the related DORA directive.
What does the directive do?
It amends other EU financial laws, UCITS, AIFMD, MiFID II, Solvency II, etc., to remove overlapping ICT rules and ensure consistency with DORA, which in turn meant amending the corresponding Luxembourg laws.
Now, the interaction with existing CSSF circulars, that caused some head-scratching.
Understandably. The key principle is DORA takes precedence over conflicting national rules since Jan 17, 2025. This affected circulars like 2750 on IT outsourcing, 22806 on outsourcing generally, and 24847 on cybersecurity.
But non-conflicting parts remain.
Yes, but to clarify, the CSF issued that update package in April 2025.
Can you quickly summarize the key changes from that package?
Sure. New Circular 25880 is for all payment service providers, DORA or not, covering EBA guidelines and Lux payment law reporting. Amended 2750 now only applies to non-DORA entities for general ICT risk.
Okay.
Amended 2020-806 is now split. For DORA entities, it only covers business process outsourcing. BPO ICT outsourcing is under DORA and the new 2582. For non-DORA entities in Chapter 16 Mancos 22806 still applies fully to both BPO and ICT.
And the new 25882.
That applies only to DORA entities. It complements DORA on ICT third-party services, clarifies things, details reporting like the outsourcing notification form, and keeps some relevant bits from the old 22806 that aren't in DORA itself.
So firms really need to check their DORA status and figure out which circulars apply now.
Absolutely essential.
That sounds like the CSSF has been quite hands-on in preparing the market.
They have readiness surveys, reminders about LEIs and eDesk roles, detailed ROI guidance, extending that deadline, clarifying incident reporting, talking to ALFI and a BBL.
How's the CSSF approach perceived?
Generally as constructive and pragmatic, they seem to recognize the challenges like delayed EU standards, tricky TPP negotiations. They've provided guidance and engaged with industry.
But they have teeth now.
Oh, yes. The law of 1st July 2024 gives clear enforcement powers. Significant fines up to 5 million euros or public naming for individuals are possible.
So sport first, then enforcement.
That seems to be the likely path. Expect more active supervision now, compliance checks, maybe on-site inspections to make sure DORA's objectives are actually being met.
Let's focus on governance again. Both MICA and DORA really put the spotlight on the board and management, don't they?
They absolutely do. Compliance isn't just a departmental task. It's a core governance responsibility, requiring active leadership and oversight from the very top, the management body.
MICA has governance rules too.
Yes, for RTMD issuers and
Yeah.
VSP's robust internal setup, clear responsibilities, fit and proper management.
But DORA is even more explicit about the management body's role.
Extremely explicit. Ultimate responsibility for ICT risk management lies with them.
What does that mean in practice?
Defining and approving the ICT risk framework and resilience strategy, overseeing its implementation and checking it works, allocating enough budget and resources.
And ensuring they have the right knowledge.
Yes, ensuring the board itself has sufficient current ICT knowledge and skills, regular training is implied. And actively steering the whole approach, adapting as needed.
So this needs to be woven into the fabric of the organization.
Definitely. Clear reporting lines define roles. CSSF emphasizes segregation of duties, though maybe some flexibility for smaller firms, maybe dedicated committees.
Integrated into overall risk management.
Crucially, ICT risk, including third-party risk, can't be a silo. It needs robust internal controls, regular assessment, and digital resilience needs to be part of strategic planning and budgeting.
This sounds expensive.
It will require significant investment, financial, tech, people. Upgrading systems, security tools, resilience testing, training, including for the board. Maybe hiring external experts.
And the CSSF already focuses heavily on governance, right?
Always has. General circulars like 12552 set the baseline. They look at it in specific contexts too, like NAV errors. So it's almost certain their DORA supervision will scrutinize board oversight very closely.
And there's personal accountability.
Very much so. The explicit duties under DORA, the potential sanctions including individual fines or public reprimands, it creates strong personal accountability.
Less MICA liability.
Yes. Issuer liability for white papers, fit and proper rules for CSP management. Board members, senior execs need to be demonstrably engaged. They need to understand and oversee this.
Okay, let's wrap up. Key takeaways, immediate priorities for our listeners.
Right. First, confirm your scope. Are you under MICA DORA? Both. Which activities, which assets, get that documented. Classification is key.
Second.
Gap analysis and remediation. If you haven't finished, get that gap analysis done against MICA, DORA, and those crucial April 2025 CSSF circulars. Then execute your action plan.
Third, operational stuff for DORA.
Yes. Operationalize DORA reporting and ROI. Make sure your LEI is valid, your IT incident notifier is set up in eDesk. Check your incident classification and reporting process works via eDesk. Finalize and submit or correct that ROI for ICT contracts per CSSF guidance and deadlines.
Fourth, MICA authorization.
If you need a CASP license, including existing VASPs, engage the CSSF and apply now. Don't wait. If you're eligible for Article 60 notification, talk to CSSF and submit it before starting. Issuers. Ensure your white papers and processes are compliant.
Fifth, those ICT contracts for DORA.
Review and renegotiate ICT contracts. Systematically check all of them for the mandatory DORA clauses. Prioritize critical ones, start renegotiating, document everything, strengthen governance and training. Make sure the management body gets it, gets trained, and actively oversees compliance. Update your frameworks, policies, controls.
And seventh,
Plan and execute testing, E2O. Implement your resilience testing program, schedule and budget for basic tests, and, if needed, TLPT.
any strategic points to consider?
Well, MICA offers that EU passport from Luxembourg, which is attractive, and strong DORA compliance. That builds trust, could be a competitive edge.
And this isn't one and done?
Absolutely not. Ongoing monitoring is critical. Compliance is continuous. Regular reporting, testing, framework reviews, row-why updates, TPP monitoring. The regulatory landscape keeps moving, tech evolves, threats increase.
So embed it in business as usual.
Exactly. Embed MICA and DORA into your regular processes, governance, strategy. Don't just treat it as a project that ends.
These really are landmark regulations, reshaping things significantly here in Luxembourg.
No doubt. MICA brings clarity and harmonization to crypto. DORA sets that vital baseline for digital resilience.
Proactive adaptation seems key, not just for compliance, but for grabbing opportunities in this digital era.
Absolutely. And keep monitoring the official sources, Lex for the laws, the CSSF website for their latest guidance, ESA websites, industry bodies like ALFI. Staying informed is crucial.
You've been listening to the Luxembourg Fundcast.